Ladies and gentlemen, welcome back to the channel. We have an exciting video for you today. We're going to cover a couple different things in this video. First and foremost, we will get into your latest Tesla stock news, number one. My expectations for Tesla stock, number two, Monday, Tuesday, and then into earnings on Wednesday. I'll give you my thoughts around that. And then number three, I'm going to share with you a clip from CNBC where this individual is extremely bullish on this market. She says the S&P is likely going to hit 7,000 by the end of this year, which is my exact call. I've been calling for a while now, since like May or so, when it was like a 25% rally to get to 700 on the SPY or 7,000 on the SPX, S&P 500. Now it's only about 11% higher from here, roughly, but she says we could actually hit 7,200 by the first quarter of next year, which would be upside of about 14.5%. This comes at a time in which a lot of retail investors maybe starting to get a little bit cautious. You see Wall Street getting a little bit cautious as well, just because we've went up so much so fast. But the funny thing is, historically, when you go up 20% in less than 3 months, you have a V-shaped recovery. It tends to lead to an additional 22% rally on top of that. It's usually not the time to fade the markets. Now, if you have big gains in stocks, trimming a little bit is fine, right? I bought Robinhood in the 40s on the market crash, 37-ish. It got up to 100. I sold out because I think there's better opportunities elsewhere, like with Tesla and like with some of the smaller cap AI companies we are investing in the trading community. So yeah, definitely check that out as well if you guys have not done so already. That portfolio alone was up about 6% today. The year-to-date return is 77.67%. And we are well on our way, in my opinion, to hitting $1 million in this portfolio by midpoint 2027. That is the goal I have set out. And what we are doing over there is going out finding small cap stocks with high institutional ownership that are AI or within the energy AI, biopharma categories, big themes that I think for the next decade, finding the value in those and investing in them. See, I did this with Novartis Semiconductor at $2, right? It's $7, $8 today. I did this with Nebius, right? Same kind of copy and paste strategy with other stocks. Did that in the low 20s. That stock's in the 50s today. Did that with IONQ at $7. That stock is in the 40s or 50s today. There's so much opportunity in this market. Honestly, if you're bearish right now, I would love to know why. Like, I can't come to a strong bear thesis besides, like, we go into a recession, which the U.S. economy doesn't just fall into a recession. It's too big. It's too diverse. With all of the things going on right now, it's really hard to come to a bear thesis. But hey, if you're bearish, let me know why down below in the comment section. If you want those outsized return potentials, I'm not a financial advisor, not a financial planner, but we are doing this thing. Check out that link down below in the description of this video. Again, to repeat, I am not a financial advisor, and no, in the I think that's his name in the trading community. He might be Elon Musk. He might be Elon Musk. Okay, you got to ask Task Force Talent over there at Evan and Brock and all the other guys. He might be Elon Musk. But nonetheless, ladies and gentlemen, let's go ahead and get started with this video. So first and foremost, I want to start with my expectations for Tesla stock over the next 2 days, Monday and Tuesday. Here's the bottom line. I'm not expecting much. Now, the technicals look good. The stock looks really good. We did have a pretty severe drawdown in Tesla over the past, couple of months, since, May or so. At one point, you were down about 26%. That's important because that typically happens before an earnings report for Tesla. Normally, you do get that pre-sell-off. Now, you're still down about 11% from that 367 level that you hit on May 29th. So normally you get a sell-off before Tesla earnings, and then most of the time you actually rally after Tesla earnings. Like, it's not crazy to say this. Back here in 2023 in the first quarter, you sold off before earnings. You had earnings, stock went up, right? You sold off before earnings in the April 2023 quarter, sold off right after earnings as well, and then you had a massive rally. Here you sold off right before earnings. Actually, on earnings, you sold off, and then you bottomed shortly thereafter and went through a rally, okay? Right here, you sold off before, you went through a rally immediately after earnings. Here, kind of sold off a little bit on earnings, recovered, sold off, and then, rally into the next earnings. Then you sell off before earnings, and then you rallied massively after around the election. The first quarter earnings for Tesla was really the only earnings, or Q4 earnings for Tesla technically, but came out in January, was really the only quarter that you just sold off and never really got that rally. Even last earnings, you sold off before, and then you rallied after. So that's my view on Tesla stock right now. Monday and Tuesday could be, I would say, good days, because I operate under the mind frame that hedge funds and institutions, they have more information than we do. So right now I can sit here and tell you Tesla stock is probably priced for like 500 robotaxis to be operational on the road next year. If, big money gets wind that Elon Musk is going to give guidance for 50,000 robotaxis out on the road next year, or 100,000 robotaxis out on the road next year, it wouldn't surprise me if Monday and Tuesday are good days. Now, keep in mind, I am biased. Tesla is my largest position. Again, if you guys want to see all of the stocks that I currently own, all of the trades that I am in, check out that link down below in the description of this video. Tesla is my biggest position. I am bullishly biased. Keep that in mind, okay? I do have an earnings trade on Tesla as well. I think there is massive opportunity with this earnings, because again, Wall Street is priced for like 500 robotaxis next year. If it was priced for 100,000 robotaxis next year, just the simple math on that would say the stock would be like $600 a share. Okay, we're not. We're $330 per share. You're priced for like 500 robotaxis. And that is the big upside in my view. Now, if Elon Musk also confirms that the Model 2 is still coming this year, that's also huge. Okay, so those are really the two big catalysts, and I think Wall Street's going to be caught off guard by the robotaxi. Okay, nobody's expecting the good news that we are about to get, and that is exciting. Now, again, Monday and Tuesday, it's 50-50. It's a coin toss. Depends what happens over this weekend, probably. If there's more Elon Trump drama, the stock's going to be down. If there's more tariff drama, the stock's probably going to be down. But you want to pay attention on Monday and Tuesday, especially if you're curious on Tesla's earnings, because big money, they're going to position for Tesla earnings. Wall Street is already underweight Tesla by and large. Like, Tesla and Apple are the two most underweighted Mag 7 stocks. So if you don't know in a nutshell how weightings work, okay, hedge funds and institutions kind of have to track the S&P, okay? So there's a good reason for this. If you're doing what I do in a good year, or you're invested in the right stocks, getting a almost 80% return on your portfolio, you're in the top 1% of fund managers, okay? That is an outstanding performance, okay? But if you invest in the wrong stocks and you underperform massively what the markets do, that is a big no-no. You're going to lose clients quickly. So firms, they have to kind of weight their portfolio to the S&P so they don't get, drag behind. And then they use alpha, going after higher risk, higher return strategies, whether that's options like selling options or buying maybe small cap areas, right? Then they try to get that alpha to outperform the markets. That's how it works. Well, if Tesla's, let's say for easy math's sake, 5% of the S&P, then in theory, hedge funds and institutions should all be about 5% of their portfolio in Tesla. That's not what they do, though, okay? If Tesla's 5%, and let's say Google, for simple math's sake, is 5%, but they want to be underweight Tesla, they'll have, let's say, 2% of their portfolio or 2.5% of their portfolio in Tesla, but they might have 7.5% of their portfolio in Google to make up that difference, to still, stay weighted to the markets. After this earnings, I think there's going to be a big shift in funds wanting to get equally weighted to Tesla within the S&P, right? That doesn't mean going overweight Tesla, getting super bullish on Tesla. I think it's going to take some time for Wall Street to get to that place. But to increase exposure in Tesla would seem appropriate if we get the kind of guidance for robotaxi that I am expecting. And I do think this could lead to a rally well into the 400s, potentially a run for new all-time highs could be in store. Okay, that's why I have again, I'm biased. That's why I have an options trade for Tesla earnings, which I plan to make free before Tesla earnings and just ride the profits through earnings. But then again, hey, who knows? Anything can happen on Monday and Tuesday. So that's number one. That is the first thing I wanted to cover here in this video. The second thing I wanted to cover is some of your developments with Tesla. This is not really impactful for Tesla stock at all, but I do think is cool to see. Tesla's new Hollywood diner and supercharger is now officially showing up in the Tesla app. Tesla lists 80 supercharger stalls with 325 kilowatt max charging speeds. It should be opened pretty soon for the public. Now, Elon Musk also confirms that you will be able to order food at Tesla's new Hollywood diner directly from the screen inside your Tesla. The audio of movies and videos playing on both 45-foot LED screens will also sync and play from the speakers inside of your vehicle. If you're bearish on Tesla, like, you know, it's hard like to get my mind around that. Like, sure, can you be short-term negative on certain events or when certain things happen? Of course, right? You should be, right? You should buy puts when you think there's an opportunity to make money to the downside. But if you're like chronically bearish on Tesla, I don't understand that, okay? Again, I'm biased. That's just what I can come back to. I'm biased, but I mean, that kind of tech is incredible. Now, also in pretty big news today, the new Model Y L is spotted on China's roads. And from initial kind of glances at this, it does look to be noticeably longer than a traditional Model Y. We're expecting this to be a third row, Model Y to be around roughly the same pricing as the current Model Y, and it's going to be a big seller in China. Really, it's going to be a big seller wherever it is sold. Now, Tesla Economics yesterday said on X, many fail to understand that the TAM of Optimus is the entire global labor market. Elon Musk says it's much bigger than that because everyone will want one. Optimus personally. Who wouldn't want their own R2D2 C3PO? Like, it's the biggest total addressable market in the world, right? It's equivalent to healthcare. Everyone needs healthcare at some point in their life. But Optimus is, I would say, even bigger than that, right? Optimus is going to be wildly successful beyond anyone's expectations. Like, there's a saying on Wall Street in particular that when new technologies come around, people overestimate the potential or the impact near term, but they really underestimate the impact or potential longer term. And there's an actual quote for that. I'm butchering it, but same principle, right? Everyone always expects, a lot up front, and then it's really in the reality of it. 5 years later, people are like, wow, that was much bigger than we ever thought it could be. Like, even the most bullish guy on the internet back in 2000, like today, would say, yeah, he wasn't even close to as bullish as he should have been because it just surpasses everyone's expectations with new technologies built on top of new technologies. And Optimus is one of those things where, again, the stock is not pricing that in at all. Now, I don't think this is the earnings that we're going to start pricing in Optimus in any kind of large way. Although, hey, we could be pleasantly surprised. But with that said, ladies and gentlemen, I do want to get to the third and last topic of this video, which is simply this clip from CNBC that is outright incredible. Take a listen.
500 posting its ninth record close this year. Our next guest, get this, says she sees the index hitting 7,000 by year end. And I asked someone the other day, how's next year look? You're even giving me something for that, Marianne, 7,200 by the end of next year. Bitcoin, 150,000. Wow, you're a wild woman. This is Marianne Bartels is here with Sanctuary Wealth. You are not afraid. You're fearless.
Well, that's after 40 years of being in the business, Joe. I've developed some confidence in the analysis that I'm able to do. And, you were right. You said that, we need growth and AI, and I think it's coming. I think it's going to significantly impact corporate earnings, productivity, and it's going to show up in the equity markets. And Joe, it's not just a bull market here; it's a bull market globally. You're seeing European markets break out. I think you're going to get the Japanese market to break out. It's a global secular bull market driven by all this new innovation, from AI to blockchain to crypto to Web3. And I don't think all of this is yet priced into the market. And you can see we're already in a summer melt-up. The market is not positioned for this yet.
That was a point that was made by Kevin Warsh yesterday. I don't know if you saw it, Marianne, that there are powerful disinflationary forces coming from AI. And if you think about the internet, none of us had any idea what that was going to usher in. And if this is more powerful, what happens with AI than the internet, think about in terms of it maybe not just disinflation, but the amount of, I guess if you have growth, deficits, and debt becomes less cumbersome. And therefore, there could be perhaps a secular disinflationary trend from technology, which is pretty exciting. But we could have lower rates and not worry about it.
And I agree with that. I do think rates are trending down and can go much lower than people expect. Right now, we're in heightened fear that tariffs are going to bring inflation. And I think over time, especially trending into next year, we can get rates down. And that's going to be another stimulus for risk assets, for the equity market, for the crypto market. And then maybe finally we can get something moving in the housing market if we can get rates down.
Marianne, you didn't start the year at 7,000, did you?
I started the year at 7,200. And when tariffs hit...
Yeah, go ahead.
So when tariffs hit, we did mark down that if we did go into a recession, those targets wouldn't be hit. But since after we went down 20% from the tariffs, we've been raising our targets ever since. And so I'm comfortable getting to year end at 7,000. And I think in the first quarter of next year, we might even be at 7,200. What I learned is that I shouldn't have changed my forecast.
Right. A lot of people, I'm watching crazy stuff happen. They start the year at, sometimes if you don't look at where they were and just where they are, you don't see that they're just almost wherever the market goes becomes their target near term for where they are. So that, we don't need to mention any names. How does Bitcoin factor into that? Because if it's disinflationary, it makes the whole, maybe it hurts the argument for fiat, declining and Bitcoin being the place to go.
Well, with the passage of the Genius Act and having stable coins having to be backed by short-term U.S. Treasuries, that's not going to hurt the dollar. I think the story and the trash of the dollar is completely wrong. I think the demand for the dollar over time is actually going to go up. And as for Bitcoin, I always called that's the currency that we didn't have when we created the internet. And Joe, we're going to really be transforming, displacing how we actually move money, not just here in the United States, but around the world. The system is going to get a major upgrade as we shift to digital. So when clients ask me about Bitcoin, I said, just think about digital currency. Bitcoin is your digital currency. And Joe, the other analogy that I use for our investors is think of Star Trek. The technology that you see throughout Star Trek is really becoming our reality. From Kirk with his flip phone, and then you had Star Trek, the new generation, and all their consoles were iPad. The communications officer had an earpiece. You had a robot called Data. Well, what was the currency on Star Trek? It was credits. And Bitcoin is a credit on the blockchain. Stable coins are a credit on the blockchain. So all you need to do, Joe, is go back and rewatch Star Trek to know that this is the new reality that we live in.
So let me know your thoughts on all of this down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. Have a great rest of your day. Check out the link down below in the description of this video for the trading community as well. That is it. Have a great weekend, and I will see you in the next one.